There we go. And that's good. That's good. And why isn't this working? You can go live, enjoy live as a guest starting May 29th. Oh. 11:30. Yeah, a lot of good that's going to do me. Good evening. Hey, Steve, Yosef, Duke. Phantom, what's going on? Just another AC. 00. Ronald, what's going on? What's going on? What's going on? I've asked you 3 times. Scott, what's happening? Scott, Mural, what's happening? Charles Dima. Good evening, Mr. Charles. All right, here we go. I think, whoa, wait a second. Almost there. Chris, what's happening? Okay, we're going to get this one out of the way. Get that one out here. That one. That one out here. That one out here. That one there. This one. There we go. And we want to do this. And we want to do that. We want to do this. We want to do that. All right. There we go. Lovely, lovely. And start streaming. And we should be streaming very shortly. New Jersey, what's happening? Mike in love. What's happening, Mike? Good evening. Good evening. Pat Dan Mac. All right. What's that? PDM. What's happening? All right. So I'm not going to be able to go live here. So let's see what's happening over here. Let's go home. Let's write that. And what do we have here? Nope, that ain't it. Oh, there we go. Live. All right. Lead Sponge. What's happening? New Jersey 78. What's going on? What's going on? Anderson. What's going on? AG. Good evening. Olivia. Good evening. All right. Silas wants to take a look at Pepsi first thing this evening. Let's take a look at it. Dude, you work mega hard on 3 streams. Actually, I got 7. You like that one? 7. All right. Anyway. Let's check this out. First one we want to take a look at today is Pepsi. Who do we have here? Love to Haney. I don't know. There we go. Oh, Gabe wants to take a look at KHC. Heinz Ketchup. These not 3. Okay. Thoughts on Nvidia. Now, Sheldon. Now, a lot of people like Nvidia, and it's, you know what? It is okay for a growth stock. Okay, if you're looking for growth stocks, you're in the wrong place. I'm just trying to help you out, brother. Okay, you're wasting your time here. I don't do growth stocks. I'm an old man. I'm looking for cash flow. Okay? Simple, safe, predictable, consistent 1% a week. That's over 50% a year, and I concentrate specifically on dividend stocks that are consistently profitable. Alrighty? So, hate to waste your time. So, no, I don't do Nvidia here. KB, what's going on? Maurice, good evening. Haphazard, good evening. I've got a good one tonight. Cash flow, way to go, Pete. Thoughts on Casey? Uh-oh. We're going to take a look at Casey in a minute. Let's go take a look at, first one on the list is going to be Pepsi. Now, we've been watching Pepsi for quite a while, waiting for it to find a new bottom. She's dropping. Oh, that could be it right there. But before we go into that, let me get started. I'm going to apologize now. Sorry. I didn't say hi, hello. Well, hello, everybody. My name is James. This is Dividend Stock Talk, where I'm looking for specifically, you ready for this? Simple, safe, predictable, consistent 1% per week. I'm using a strategy called Dividend Capturing 2.0. I created it for my 9-year-old daughter. In 2008, when she was 9, she's going to be 26 this year. When she was 9, she said, Daddy, what are you doing? Can you teach me? 9 years old, daughter wants to learn how to trade dividend stocks or trade in the stock market. Now, most adults don't get it. Most adults don't understand it. So how am I supposed to explain it and create something specifically for a 9-year-old? Think about it. How would you show a 9-year-old to invest in the stock market without losing? Because we know if a little girl loses her money, she's going to cry to mama. And guess what? Mama gets involved. Yeah, I'm sleeping on the couch. Yeah, that's not going to be helpful at all. So I came up with a strategy. Simple, safe, predictable, consistent, and no way for her to lose. Now, to figure that out, I came up with 5 rules. Okay? 5 criteria, 5 rules. You ready? Actually, they're all important, but number 1, never buy something you don't understand. Never buy something you don't want to own for the rest of your life. Never buy something you're not okay with it dropping, increasing, whatever happens to it. You have to be okay with whatever you decide. That's number 1. Number 2, once you make that decision, never sell at a loss. It defeats the purpose of the whole game. And yes, it is a game. Kind of like Monopoly is a game too, but there are people out there buying real estate. Okay, there is rule number 3. Now this one boggles my mind completely because I don't even know how to explain it. Rule number 3, make sure the company you invest in is consistently profitable. I know it sounds simple. It sounds almost elementary, but think about it. Never invest in a company unless it's consistently profitable. Now, I check every single week. This week, as of Tuesday, there are 10,046 different companies that we could invest in. That's a lot. So I'm looking for companies that are consistently profitable for a minimum of 2 decades. Oh, look at that. I got that little thing. That's cute. So 2 decades, that's 20 years of consistent profitability. So ask yourself, why would you invest in a company that's not consistently profitable, especially if you're looking for a safe, predictable income for cash flow? Now, there's a huge difference if you're looking for capital appreciation. Let me explain the two. The difference between capital appreciation and cash flow, well, us older folks, we're retired and we're no longer working, we rely on a fixed income, a monthly cash flow. So I went a little bit further and I said, you know what? I want weekly cash flow. All right, great. So companies I'm looking for, consistently profitable. Now, the difference between cash flow companies and capital appreciation companies is when a company is profitable, you'll have one take the profits and share it with you and me, okay? That is a cash flow company. Now, a capital growth company, they take all their profits invested back into the company so that the stock will rise higher and higher and higher. So 5, 10, 15 years down the line, you can turn around and sell it and make a profit. Well, here's the thing. I'm 61. I'm retired. I rely on that income to help me pay my bills. So capital appreciation is not in the cards for me. Okay, hold up. I got somebody in the background. Who is that? Andrew. We got to mute you out there, buddy. There you go. Okay, Andrew, when you want to speak up, just unmute yourself and just have at it, okay? So as I was saying, that was rule number 3. Make sure the company's consistently profitable. Now, as the night progresses, you're going to be surprised at some of the stocks some of your fellow investors are looking at. And you'll probably be scratching your head thinking, what the hell is that person thinking? Consistently profitable for at least 2 decades. That's rule number 3. Rule number 4, weekly options only. Now, if you read the title of the show, Dividend Stock Talk, well, we're talking about stocks that pay dividends. Dividend Stock Talk. That's what we're talking about. Now, the subtitle is Dividend Investing for Weekly Cash Flow. So weekly options are something that gives me weekly cash flow. Other than that, I find myself sitting in front of a computer looking at this crap all day. Yeah, that doesn't work for me. I want simple, safe, predictable, consistent 1% per week. Now, you may have heard my one of my speeches saying, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. So when my daughter was 9, this trading strategy, well, it had to be simple, safe, predictable, consistent, and able for her to do it in less than 10 minutes. Okay? Rule number 5, make sure the numbers work. Now, I'm going to do a couple of trades as the night progresses, so I will show you exactly what I do. And yes, I do have stuff to sell, but I'm going to make you a promise I'm not going to have a pitch at the end of the evening. We all know how this works. I've been doing this for a while. I've written a bunch of books. I have a study course. I have all this kind of nice stuff. I even have a morning trading group that you can actually join if you feel the desire to, but that is a paid service. I'm not going to try to sell anyone anything. That's the last thing you're going to hear me say about anything unless somebody specifically asks me, okay? So I'm not going to tell you anything. I'm not going to send you a pitch by the end of the night, okay? This is all going to be stuff you can do without my involvement whatsoever. It's a simple, safe, predictable, consistent 1% per week strategy created for a 9-year-old. If you can't understand it, I don't know what to say. Rule number 5, make sure the numbers work. Like I said, we are going to do a couple of trades so you can see how it works. And then you can decide. Number 1, out of everything, number 1, I'm going to reboot. It's 9:30 and 38 people. Yeah, that ain't going to work. So you guys on TikTok here, jump back in. I'm going to reboot this. That's crazy. All right. All right. We're going to reboot. Okay, let's reboot this. All right, and there we go. Let's see. All right, let's see if that helps. All right. All right, Chloe, good evening. Mike, Jeff, what do you think about gold for today? Now, Mike, I don't buy gold. It's one of those commodities to be bought and sold. Now, you're from Bangladesh, cool beans. So I don't do gold, I don't do silver, I don't do those hard currencies because you can't get weekly cash flow from them. They're great for retaining value because if you buy a couple ounces of gold today, well, 10, 20 years ago, they're going to be worth more money. Kevin, hello again. Yep. Well, let's see if we can get the count back up higher than 35. That was crazy. Do you remember me? Chloe Grace Torrejo, something like that? No, I don't, Chloe, sorry. I'm from Bangladesh, cool beans. Okay, Midrami, good evening, good evening, good evening. Can they exercise your call before the expiration date? So David and Lisa, yes, American options can be exercised before the EX date, unlike European options, which you can only exercise on the day of expiration. Okay, so American option is a little bit different. So anytime whatsoever. Let's try this again. Here we go. Oh, hey, look at this. Hollywood's in the house. He wants to take a look at Foot Locker. All right, Foot Locker it is. Mike, Jeff, hello again. How about Pfizer? Gary, we'll take a look at Pfizer in a little bit. PFE. All right, let's rock and roll. Let's do this. First one on the list is going to be Pepsi. All right. Now, if you didn't know, Pepsi is a dividend king, which means they have increased their dividends for more than 5 decades. That's 50 years for those of you who don't know that, okay? 50 years. Now, some of you people aren't even 50 years old yet. But imagine that, a company that is consistently profitable for more than 5 decades. All right, that being said, here we go. Here's the high, here's the low, here's where it was, here's where it is. Now, we've been watching this for the past couple of weeks because we want to see what's going on right here. Because this is the low of the year. Now, you've heard it over and over and over again. To make money in the stock market, you got to buy low and sell high. Well, you can't get any lower than the low of the year, and that was just last week. Okay, so let's see what we're doing. Oh, what's your portfolio show? Lyrical. Lyrical, my portfolio show. What the heck is a portfolio? I know what a portfolio is, but what's a portfolio show? Am I supposed to take all my portfolios and lay them out so I can show them to everybody? Got to be more specific with your wording. All right, hold tight for a second. Pepsi. First thing I want to do is I want to check the numbers and see if it makes sense. Assets. Okay. You got to be more specific. All right, hold tight. It's currently at 131.92. So if I'm going to do a covered call on Pepsi, I'm going to look at the 132s because at 131.92, the closest strike price is going to be 132, and it's going for 142. Now remember, I'm saying 1% a week. So 1% of 132 is going to be 132. But show me your 10-year gains. How about no? Hold tight for a second. Apparently, there's always somebody that wants to see. Okay, so I'm going to show you the trades for this year. Okay, I have 7 accounts. I'm not going to show 7 accounts. Here we go right here. What you're looking at here, week 21 of the year, May 19th to the 23rd. Now, this is this week here. I haven't posted those trades yet. Okay, this is last week's trades. This is the week before, 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 the week before. Fine, now you know where they are. Matt Yellow Teeth. All right, anyway, let's keep on going. So, who was that? Lyrica. All right. All my trades are posted. You want to take a look at them? Be my guest. The10MinuteTrader.com. The information's in the bio on the top. I'm interested in your channel, or I wouldn't ask. Okay. Him. Okay, what do we have here? Don't. Sishical. I can't even read that. What's high potential stock you are eyeing? Ooh, hold that thought for a second. F. Math Roy. I have no idea. Oh, Math Roy. Okay. Yep. Anyway, that being said, on the website is everything you need to know. In the videos, on my YouTube videos, you will find everything you need to know. They're free. There's over 1,000 of them. Have fun looking at all those. Oh, I'm subscribed now. Cool beans. All right, so let's take a look. Let's get out of that. So for those of you who want to see what my current trades are, okay, April 14th to the 18th, week 16 for the year, week 17, week 18, week 19, week 20, week 21. We are currently in week 22. See, May 26th to May 30th. Okay, I don't post them until the weekend because at the weekend, everything settles. Okay, you have the options all settling out and you have all the numbers. So if you want to look, there they are, the links in the bio. Now, each and every channel has its own bio, and yes, that's where you can find them. Let's get out of there and let's go back to Pepsi. All right. I have no idea what that means. Okay, KY, thank you, KY. Pete, you buy and sell each week. I have no idea. I'm assuming, Pete, you mean you buy and sell each week. Yeah, Pete, I do. I'm retired. I got nothing else to do. Okay? Look at it this way, Pete. Most people spend more time planning a barbecue than they do on their own personal finances. So I take a look at my personal finances, especially my cash flow, every single day. It takes 10 to 15 minutes. Okay? 10 to 15 minutes a day is about an hour a week. An hour a week for a 1% return, well, it doesn't sound like a lot until you factor in compound interest. And once you throw in compound interest, the numbers get huge. Yes, I love a burger and holding. All right, Pete, way to go. All right, Lyrica, if I had $10,000 right now, what would you invest in? I know what I would invest in. But I can't tell you what to invest in because I know absolutely nothing about you. So for me to tell you something to invest in would be doing a disservice. Now, basically all I'm doing here is I'm showing you the stocks that you and your fellow investors are looking at. And I'll give you my opinion. Uh-oh. Pete said, do you ever invest in Misty? Pete, let me explain something to you clearly. I'm going to speak directly to you so you understand. I'm going to talk slowly so you can also read my lips. When I say I don't buy anything unless it has 2 decades of consistent profitability. 2 decades. Now, if you don't know what a decade is, let me break it down for you. It's 10 years. So 2 decades is 20 years. And if you really took a good look at MSTY, you'll probably scratch your head and say, oh, that's awesome. But really think about it. The numbers that they're reporting are unsustainable. Take a look at them and see how consistently profitable they are. Not 20 years. So for me, Misty's a no. That's for me. If you like it, hey, more power to you. Pete, okay, I read lots of PPL. I love Misty. Absolutely nothing wrong with that whatsoever. Okay? Now, Misty is not something that I would do because when I said I'm looking for cash flow, Misty doesn't fit. Okay, good time. Good evening, good evening. All right, let's get back to Pepsi. Okay, so we saw the chart. We saw the numbers. It looks good. All right, so now I want to see, is it a good... Now, we've been watching Pepsi for a while. We've been watching it drop, looking for the bottom. Because once the bottom finds, it turns around, goes back up, because that's what stocks do. They go up, they go down, they go up, they go down. Well, great, look. Down, up, down, up, down, up, down, up, down, up, down, up, down, up. Same thing. That's all they do. They don't come to your house, take the dog for the walk. They don't hang out and wash the dishes. They don't take out the trash. They go up, they go down, and that's all they do. Eric, Krispy Kreme. Okay, Eric, I'm going to tell you the same thing I just told the other guy. If it doesn't have 20 years, 2 decades, 20 years of consistent profitability, I don't want to look at it. Krispy Kreme does not. What direction will Bitcoin go? It will, yes, absolutely. Solo King, thanks. Diddler, should I gamble my mom's heart surgery money on black? I can't tell you that one. Makes sense, thank you. All right, Eric, I'm glad you appreciate that. Because, Eric, I don't know anything about you. I don't know how old you are. I don't know what your risk factors are. I don't know what your goals are. I'll tell you what mine are. I'm 61. The money I have has to give me money every single month in order to live comfortably. So weekly options is it for me. Okay, stock market's been around for over 400 years. It ain't going anywhere. Stock options have been around since the 1970s. Well, that's a good record too. So what we have, I don't think, is going anywhere. Could it disappear? Yep. If you believe, what's his name? Oh, I don't even want to bring that up. It's a sore spot. Sore. What is it? Sour subject. I don't know. All right, let's keep on rolling. Hugh wants to take a look at Hess. Okay, let's finish up with Pepsi first, okay? A year ago, we're at 170. We jump up to 180. We drop all the way down to 125. Look at that. Down, up, down, up, down. What's going on here? This is what we want to take a look at. Okay, so I'm looking for 5 things. Anytime I look at any chart, I'm looking for 5 things. And it should take you ready for this? 3 to 4 seconds. That's it, 3 to 4 seconds. Now, you can spend hours examining this. Me, 3 to 4 seconds. Let me show you exactly what I'm looking for. You ready? High, low, where was it, where is it, and what direction is it going? That should take you 3 to 4 seconds because it's not that difficult. High, low, was, is, direction. Okay? So it's not at the high, it's not at the low, somewhere in between. Great, let's go break it down to the 90-day. Well, because the last 3 months gives me a good idea what my fellow investors are doing. So the last 3 months would be the 29th of February. The 29th of February. Okay, here we go. High, low, was, is. Look at the direction. Down, sideways. Look at this right here. Now, we thought this was the bottom a week ago. But look at this one right there. 1, 2, 3 days to the upside from the bottom right here. That looks freaking awesome. But before I jump to conclusions, let's check out 2 more charts. The 30-day, because the 30-day will give me a good idea of where it's going next. Now, it's not guaranteed, but it's a good idea where it's going next, because stocks only do 2 things. They go down and they go up. Okay? Up, down, down. Now it's going up. Okay? 1, 2, 3 days to the upside. Now, me personally, I like 2 days to the upside from a bottom. Here's the bottom of the year. Not the bottom of the week, not the bottom of the month, not the bottom of the quarter. It is the bottom of the year. You want to make money on Pepsi, you buy at the low, you sell at the high. Now, I'm not telling anyone to buy it. I'm just pointing out the obvious. Here's the bottom of the year. Well, Tuesday was higher, Wednesday was higher, today is higher. So what does that tell you? 30 days ago, she's up at 136. 2 weeks ago, she's down to 128. Well, now we're at 132. Definitely going to the upside. Awesome. Well, the 4th chart I want to take a look at is what's called the seasonality chart. Haphazard, there's no 29 days in February. There used to be. All right. I'm looking for the seasonality chart. Now, let me briefly explain to you what a seasonality chart is for those of you that are new. A seasonality chart. Way to the left, January 1st. Way to the right, December 31st. It is actually the whole year in one glance. So what are we looking at? Well, the blue line represents the movement for just this year alone. Okay, January 1st, we're right here. Okay, the red line, that's 10 years of data. 10 years. It gives me an idea of what this stock normally does this time of year. Because you have to admit it. You don't, well, depending on where you live, of course. I live in Florida. I don't put my heater on in June, July, August, September. Okay? When I'm up in New England, I don't put my air conditioner on in January, December, February. Doesn't make sense. Same thing with corporations. Corporations are affected differently through different times of year. Okay? That's why they came up with seasonality. Look at this, Pepsi. Down the first quarter, up the second quarter. Okay? Down the third quarter, up the fourth quarter. You can just time your stock buying or your option buying just by looking at the seasonality chart. If the company does it every year for the last 10 years, there's a good possibility it could do it again. It's not guaranteed. There's only 3 guarantees in life, and I bet you most of you know 2 of them. A few of you probably know the 3rd one. So let's keep on going. All right, I want to zoom into this right here. Okay, so this is what Pepsi looks like it's going to do for the next couple of weeks. Look at that. That's not that great, but however, the current trend supersedes this. So whatever the trend is doing, that's what normally the stock does. So the stock is moving up, well, that's what it's doing. This is just an average over the last 10 years. Well, we're not in normal times. This is not normal for us. All right, let's keep on doing this. Let's go back to here. Let's go back to here. Now, I like Pepsi. So what we're going to do is we're going to do a practice trade. Remember I told you I'm going to show you a practice trade so you see how it looks. Flip Flower, he looks like the guy with joystick and a submarine. All righty, thank you for that. Daniel, how you doing? Okay, Haphazard says there's no 29th in February. Okay, Haphazard, I can almost guarantee you with 100% certainty. The 26th of February, 27th of February, 28th of February, guess what? There's another day that comes after the 28th of February. There is. You can call it whatever you want. I'm going to call it the 29th. You holding Solana? No, I am not. Randall Ray, are you losing your US deal? Okay, Randall Ray, I don't really consider it as losing. Okay, now Randall, I'm going to take a look at US deal specifically for you, and I'm going to point out to you what I'm doing with my US deal. Okay. Haphazard, Casey. I have no idea who Casey is. Unless we're talking about the mighty Casey who struck out at Mudville 9. I don't know. Bradley Dufresne, tell your money where to go and you won't wonder where it went. I brought up US Steel 4 days ago. Okay. Hershey. Oh, Wampa wants to take a look at Hershey. HSY. Okay. Hold tight. Let's see what we're doing. Daniel, good. All right. Imagination. Hello. Home Depot's a good one. Yep. Eric, hold that thought. HD. Okay. I'm going to pause all the questions so that I can finish up with Pepsi. Okay? We're going to finish up with Pepsi, and then we're going to move on to the next one. So when I say I do covered calls, it's a simple, safe, predictable strategy. The simplest strategy is buying, but there's no profit in buying. You actually have to sell something. Think about it. If you buy a stock, yeah, it's a safe bet. However, there's no profit there until you sell something. So the next simplest, safest trading strategy is called the covered call. Now, it is so safe that the federal government allows you to do it in your IRA. Okay, most other strategies you cannot do in your IRA, but you can with the covered call. So I needed something simple, I needed something safe, something predictable and consistent. Here's where the consistency comes in. If I buy Pepsi tomorrow morning and I own it, I can do whatever I want with it. I can sell a covered call next week, June 6th, the week after, June 13th, the week after, June 20th, the week after, June 27th, and so on and so on and so on, every single week. Now, I look at it a little bit differently. I'm not buying stocks. I'm buying a cash-producing asset. Okay? 100 shares is a cash-producing asset. It will allow, yay, baby! In the house! How you doing, yeah, baby? All right, saying hi. There we go. There we go. All right. So I'm buying a cash-producing asset. Pepsi. That's my Pepsi machine. I buy a couple hundred shares of Pepsi, and then I sell a covered call every single week. And it gives me cash flow every single week. It's kind of like a soda machine. Okay, my Pepsi soda machine. Okay, 100 shares is cost me $1,300. Or is it 13,000? I don't know. Let's find out. Let's find out. All right, so we're going to do one at the $132 mark because it's at $131.98. Now, come on. We all know the next whole number after $131.98 is going to be 132. It's right there, 132. All right? And the 132 is going for 142, which is more than 1%. And if I do that every single week, that's more than 52% by the end of the year. And if I compound it, it's getting close to 65%. All right, let's check this out. All right, I want to change this. Here are all the strategies you can do. Okay, now I know how to do most of them. Some of them I don't even bother with because they're a little bit complicated and a lot more education is going to be needed and a lot more time and effort. So I want to stick to something simple, the covered call right there. So I'm going to pick that one. And it sets up everything for me. There it is, the 132 right there. And here she is. Now, I'm only going to do one contract because I don't want to scare you away with doing 10 because the numbers get a little on the big side. Okay, just one contract right there. And here's Johnny. Buy one covered call of Pepsi. 100, which is the weeklies. 6 June 25, that means this option expires next Friday. Now, I'm going to buy the stock, okay, and I'm going to sell somebody the option. Now, there's a difference between the stock and the option. The stock I will own until I decide to sell it. The option, well, that has an expiration date. It's kind of like a gallon of milk. You buy a gallon of milk, it has an expiration date to it. So you got to use it or lose it. Same thing here. The expiration date, 6 June 25. At 3:59 p.m. next Friday, you use it or you lose it. Whoever buys it. I don't care who buys it. I'm selling it. Now, the reason I'm selling rather than buying is because 80% of all options expire worthless. So I want to be on the selling side of the 80. I don't want to be on the buying side, the 20%. No. Now, options can be profitable. They really can. But it's not a gamble I want to take. Remember, I'm 61, I'm retired. I don't have the luxury of being wrong. You people that have 10, 15, 20 years to go, you can be wrong. Okay, I'm already retired. All right, so what I do has to pay for my existence on this little rock floating around in space. Let's do this. Okay. 6 June 25, that's next Friday, the 132 call option against the Pepsi stock at the market to open to open. Now, the reason it says to open is because you're doing 2 trades at once, saving on commissions. What a great plan. Okay, so you're buying the stock at the market open, whatever it opens at, and then you immediately turning around and selling the option against it, thus giving someone else the opportunity to buy it from you for almost the exact same price you paid for it. Now think about it. It kind of doesn't make much sense, does it? Seriously, think about it. If I'm buying it at 131.98 and I'm selling it for 132, well, that's only a 2-cent profit. Correct, it is. However, what you're missing is the option value. So just for letting somebody buy it from me for almost the exact same price I just paid for it, they're going to pay me a premium called a stock option. Okay? And they're going to pay me $154 for each and every contract. Okay, what does it mean? Well, let's find out. Let's get the calculator out and find out what 154 actually means in dollars and cents. Calculator, here we go, yo, here we go, yo. Okay, clear that out. Profit, 154, right there. Maximum profit, 154.50. Now remember when I said I want a simple, safe, predictable. I already know what I'm going to make before I do anything. Simple, safe, it's one of the safest trading strategies it is. Predictable, I already know what I'm getting. And consistent, well, I can do it every single week until I hit my target. Well, if I'm buying it at 131.92 and my target is 132 and I'm collecting 1% every week, 1% or more every week until my target is hit, how can I go wrong? Let's keep on keeping on. Keep on keeping on. Okay, so to find out the profit, you got to take, to find out the rate of return, you got to take the profit, the 154, divide it by the investment. Okay, max the cost of the trade, including commissions and fees. Okay, that's my investment. So I'm buying a Pepsi soda machine for $13,000, and this Pepsi soda machine is giving me $154 every single week. Okay, that's over a 50% return by the end of the year. And if you compound it, you could hypothetically double your money every 14 to 16 months. Well, that's nice. Okay, let's do this. Okay, so 154.50 divided by 13,046. That comes to a grand total of 1.18. Okay, so 1.18 is more than 52% per year. Probably more like 54 or 55. I don't know. Let's find out. Multiply that by 52 because there is 52 weeks in the year. 61%. I was wrong. 61%. So 1.1% per week is 61% per year. Well, I can live with that. It's a lot better than 50%. Not by a huge amount, but still. Let's get back to where we started from. So it doesn't really tickle me that much, 1.1%. I mean, we looked at a few early during the week. Merck was 2%. Abelmal was 3.7% this week. Well, cool. What else do we got? Occidental Petroleum, 1.1. Hewlett Packard, 2.2. Cool. But anyway, Pepsi. So here's the thing. We saw the numbers. We saw the charts. Okay? So here's the big question. You ready? Question number 1. Does it make sense? Come on. You've heard of Pepsi. They've been around for over 100 years. They are a dividend king. And that means 5 decades of consistent profitability. That means every single year they make more and more and more money. Okay? Now, the bottom of the year was last week. 3 days to the upside. Anyway, is what it is. You decide. Number 1, does it make sense? Number 2, do I like Pepsi? Number 3, do I like Pepsi at this current price? Number 4, am I willing to buy Pepsi, hold it for the rest of my life, and sell covered calls every single week until it hits my target price? Well, my target price is 132. And it's in an upward trend. Maybe I'll hold it for a week. Maybe I'll hold it for 2 weeks. Maybe I'll hold it for a month. The longest I personally have held anything is 9 months. I have no desire to hold something forever unless it consistently pays me 1 to 2 to 3% every single week. Okay? Let's go. That's Pepsi. Next, Casey. Haphazard. What the heck is Casey? Let's put it in. CASY. Hell no. Come on, dude. You've been here long enough. I don't do monthlies. You know that. And I don't know why you would suggest me to take a look at Casey. See, this comes to rule number 1. Never buy something you don't understand. So, knowing a company means you should know whether or not it has weekly options, monthly options, if they're consistently profitable or not. So Casey's monthly options. I don't do monthlies. The numbers just don't work. Wampa wants to take a look at Hershey. Hershey, HSY. Now, didn't Hershey get bought out by a Chinese company a few years back? Oh, look at that. See, 3 seconds, right? High, low, was, is. Look at the movement. Down, up, down, up, down, up. Okay, simple, right? But look, I love that right there. This week and last week, that right there. Okay, so 161.32. So the 161 or the 162, depending what the numbers look like. 162. The 162, 190. Oh, yeah, that's over 1%. Well, let's check it out. A year ago, Hershey is at 194.84. The high of the year, 208, and that was the beginning of December. Okay, we bottomed out the first week of February, 140. Okay, so from the bottom, 140, she shoots up to 195. That's a $50 increase. Okay, so from 140 to 195, that is a 30% increase. $50 on a $140 stock is about 30% increase, give or take, about 30%. So yeah, it came down, gone sideways, dip. Now she's back up again. Look at this right here. That looks freaking awesome. Let's zoom into that a little closer. Now, do a quick count, right, in the head. The last 20 days, last 30 days. Oh, all right, sorry, right there. The last 30 days, see how quick you can do this. Ready? 1, 2, 3, ready? High, low, was, is, up, down, up. 3 to 4 seconds. Okay, 3 to 4 seconds, see? Here's the high, here's the low, here's where it was, here's where it is. Look at what it did. It went up, 30-day high. What usually happens at a 30-day high? Usually, profit taking. People take the profits and the stock drops. And then it gets to a point, okay, after the big drop, it gets to a point where people say, holy cow, Hershey at 150, let me buy some. And then it goes back up again. So if you buy a stock when it's low, and then you sell it when it goes up, then when she drops, you buy it again. And then when she goes up, you sell it, and you buy it again. That's all they do. They go up, they go down. They go up, they go down. Take notice of the movement. Okay, so from here, 162 to 172, that's a $10 increase. Okay, that's a nice increase. But from 172 to 150, that's a $22 drop. That's a big drop. That's over 10%. So from 150 to 162, that's a $12 increase. Does it have room to keep going up? Yeah, it does. Look, the high's up here. It still has more space to go. So it is a possibility. Okay, let's take a look at the seasonality. What does this company normally do this time of year? So normally this time of year, yep, she usually goes sideways. Check that out right there. Okay, so, okay, that's Friday. 1 week, 2 weeks. So the next 2 weeks, she's just going to go sideways. Well, that's great for calls and spreads going sideways. Imagination. Hi. So you're saying there's no profit. Okay, you weren't listening at all a word I said. Should I put it all on red? Mrs. Mighty, hello, hello. Buy Chinese stock for fun. That sounds like a great plan. Gates. What's happening, Gates? Okay, 301 Ghost. Ford. Jimmy, did I miss HES? Who the hell is Jimmy? Okay, I haven't done HES yet. Okay, and 3HS, Ford. We'll take a look at Ford. All right. Let's keep on keeping on. All right. So Hershey. Let's take a look at Hershey. Why not? The 162s. 162s. All righty. 162 right there. One contract. At the market. Here we go. Here we go. Here we go. Yo. Here we go. Yo. What do we got? What do we got? What do we got? Here we go. Buy one covered call Hershey's 100. That's the weeklies. 6th June 25. That's next Friday. The 162.5 call option against the stock at the market to open to open. Okay, that's the order. It's always, I find it's always important to say it out loud and listen to what you're saying, because newbies, those of you just getting started, those of you who haven't been doing it for a long time, even some of you guys who have been doing it a long time, almost everyone loses money by hitting the wrong button at some point in time. You buy instead of sell. Okay, you buy more than you should have. You sell more than you should have. Somehow you are going to hit the wrong button at some time. Now, I've been trading over 20 years. 3 times this year I've hit the wrong button. One time I lost $2,500 because I hit the wrong damn button. It does happen. Okay, now here's the tip, and this is very big. If you do hit the wrong button, and this is very important, if and when you do hit the wrong button, immediately, I'm talking immediately, stop what you're doing, immediately pick up the phone, call your broker. If you can call your broker fast enough and say, hey, I hit the wrong button, can you fix it for me? You can't wait 4, 5, 10 minutes. You can't do that, because then it's a definite no. If you can call in less than a minute or two, they will more than likely reverse that trade for you. But you got to be quick, and you can't wait. All right. So here's the offer right here. Buy one covered call, blah, blah, blah. Here's the maximum profit, 338. What is it costing me? 15 grand. Well, that's almost the same as the last one we just looked at, right? But this one looks like it's more money. Well, let's take a look. Maximum profit, 338. My calculator, clear that. 338 divided by 15,912. 15,912 gives me a rate of return of 2.1. Well, 2.1, think about it. Got to write that one down. Okay. 2.1% every single week. That's over 100% per year. You could double your money in 1 year if you consistently get 2% every single week. Now, I don't get 2% every week. I average over 1.2, 1.3% every single week. Well, it's not bad for 52 weeks. Add it up. That's over 50% a year. And I'm perfectly happy with that. Okay? I'm perfectly happy with what I got. I always have these guys ask me, hey, how about AI? Can get better? Yeah, no, thank you. Okay, what about this? You can add to your profits. Yeah, no, thank you. I have no desire to learn something new. I have no desire for that shiny object. Reason being, I grew up in a time where If it ain't broke, don't fix it. If it's working fine, leave it alone. Until it stops working, I'm going to leave it alone. It works every single week for me. Now, I can't guarantee that for any of you guys because I don't know any of you. Well, there's a few people I do know. Okay, when I say I do know a few of you, it's like I say, if you want to have a chat, if you want to talk, send me your number. I'll give you a call. Okay, in the DM. Every single channel I have. Every single channel. Oops, I got to stop that. I'm recording. What am I recording for? All right. Every single channel I have has a bio in it. It tells you my website. It gives you information about me. My phone number is even online available, so people might want to call. Fine, pick up the phone, call. I got no problem with it, but you got to find it. Anyway, let's keep on going. So 2.1% for Hershey. So the question is, do you like Hershey? We all know who Hershey is. Let's go to the next one. Next, what do we have next? Next, Ford. Let's do Ford. Why not? Ford. Nope. Wasn't that quick? Do you see how quick it should be? There's 10,046, I think it was. 10,046 different companies. Well, it doesn't take long to figure out where it's going. Okay, the highs here, the lows here. This is where it was, this is where it is. Look at the motion. Up, down, sideways, down, up, down. See, it's coming in down right now. Now, we watched it for the last 2 or 3 months. We've watched it going higher and higher and higher. Let me zoom into this and show you this. This was like crazy. We're watching this. Okay, so from the bottom here, okay, so the beginning of April, here's the bottom. Okay, 1, 2, 3, 4, 5, 6. 6 weeks in a row, this thing kept going up, 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 up. For 6 weeks. I've never seen Ford go up 6 weeks in a row. It finally got to the top last week, and now it's going down, 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 down. So I like Ford, I do. Okay, they've been in business for over 100 years, okay? Now, I will keep my eye on Ford because as soon as it finds a new bottom, turns around, goes back up again, that's where I'm going to jump in. Now, I like Ford. It's on my list. There's certain stocks that are on my list I'll keep an eye on. Now, I only look at about 300 companies, and I usually only look at them just before the EX dividend date. That's when they're getting ready to pay their dividend. When they're ready to pay their dividend, stock has a tendency to go up. So by knowing that, it's another reason why I only do dividend stocks. Because when they're getting ready to pay a dividend, stocks have a tendency to increase in value. And knowing that information, well, that puts a little bit of odds and probabilities in my favor. So if I stack enough odds and probabilities in my favor, well, I'm successful more often. And that works for me. All right, anyway. Next, let's take a look at this. The last 30 days. Yeah, we already said no to Ford. Okay, so much for that. Eric, Home Depot. Home Depot. Ready? We're going to count real quick. See who can do this. Ready? 1, 2, 3. High, low, was, is. Look at the motion. 3 seconds. 3 to 4 seconds. Okay? Up, down, up, down. Okay, it's going to be a no. Let's take a quick look. Let me zoom into the last couple of weeks. Okay, here's your eye here, drop down here, up 2 days, and now she pulled back. It doesn't take long to figure it out. You don't have to sit here and spend hours. It's 5 things. High, low, was, is, direction. Up, down, up, down. No. Isn't that simple? Now, remember, it's created for a 9-year-old. Adults have a tendency to make it more complicated than it needs to be. That's why a lot of adults don't do it. Because they think it's complicated. Well, it's really not. Right. Anyway, next. Hess. Let's get Hess done and over with. No. Wasn't that quick? It shouldn't take you long to isolate a stock and say, nope. Well, here's the reason why I said no to Hess. 20 June, 18 July, 15 August, 19 September, blah, blah, blah. It is a monthly optionable stock. Now, Monthly options means exactly what it sounds like. You could do an option once a month. Well, think about it. It's simple math. Do you want to get a check once a month, or do you want to get a check 52 times a year? 12 times a year or 52 times a year? Think about it. All things being equal. So if I do one of these options, I'll get 1 or 2%. Great. I'm walking away with 12 to 24 by the end of the year. Well, weekly at 1 or 2%, that's 50% to 100% a year. And it's still the same amount of time. Well, not really, because if you're doing monthlies, you're probably going to look at your account maybe once every 2 or 3 weeks. But I look at my money every single day. I got nothing else to do. I'm retired. And it only takes me 5 or 10 minutes because it doesn't take long. I take one look at it and say, oh, it's going up. Great. Wonderful. All right, next. Here we go. Home Depot. Maybe. Don't know. Okay. High, low, was, is. Look at this. Up, down, up. What's going on here? Let's zoom in a little closer. Did we already look at that? That looks familiar. All right. A year ago was the bottom. 323. Now we topped off at 439, and that was in the end of November of last year. Well, the last 90 days, let's go to the 29th of February. I know people like that. They think it's funny. All right. All right, 30 days ago. Here we go. High, low, was, is. Look at this. Down, up, down, up, down, up. Okay, interesting. What's happening right here? It looks like, okay, high, low, and went up and pulled back today. Makes me a little leery. Now, it could go up again tomorrow and the next day, but you got to get past that down day from today. Why did it do that? I don't know. Let's keep on keeping on. All right, what else do we have? Eric, thank you for that. All right, and... oh, no. Hollywood's in the house. Okay, Fredo. Fredo wants to take a look at University of New Hampshire, UNH. Yeah. Now, see, I have a little bit of a problem with stocks over $250. Okay, this one's what? It was $600 or $700 a couple of weeks ago. Look at this. The high, 632. Okay, the low, 250. Now, is that uncomfortable or what? Why did it drop so much? Okay, Universal Health Group. Right? Not University of New Hampshire, but Universal Health Group. I come from New England, so UNH is University of New Hampshire. Okay, now this is United Health Group. Anyway, but look at this. 630, 250, now she's going back up again. Now she's at $300. That's more than a 50% drop. Well, I don't do stocks over $250 for a reason. Any input on KNG? KNG. What the heck is KNG? Boss Hog. You've been here before, Boss Hog. Okay, you know I don't do stocks that don't fit the criteria. Okay, let's take a look. So UNH, what's happening over here? Okay, 30 days ago we're at 420. 2 weeks ago we dropped down to 250. Okay, jump up, pull back, now we're going sideways. What does this company usually do? Well, usually they don't drop more than 50%. Usually. But right about now, this thing goes sideways for a couple of weeks and then slowly drops. Doesn't make me that happy looking at that. Okay. Next. All right. What's high potential stock you're keeping your eye on? Okay. Pete, do you invest in Misty? No, I don't. Pete, I think we already had this conversation. First time watching, I apologize. KNG is an ETF based on the S&P, pays monthly dividends. Okay. Motor Oil, CEO of Nvidia, sold off $6 million shares and pretty much tanked the market today. I don't like Nvidia. And there's a reason why I don't like Nvidia. Number one, the dividends are ferocious. Ferocious, is that a word? Horrible and atrocious. Ferocious. Okay, so the company is a $132 stock. Okay, great. You would think a $132 stock with a halfway decent dividend, but 4 cents. 4 cents a year, not a quarter, a year. So you're going to spend $132 for a 4-cent dividend. Yet Nvidia is not a dividend stock in the traditional sense, okay, where it pays a dividend for cash flow. Now, it's more of a capital appreciation stock. But check out the numbers. Seriously, check the numbers. What's the book value? What's the revenue per share? Okay? Think about it. What's the dividend? What's the yield on the dividend? The yield on the dividend is 0.03. So if you know anything about the rule of 72, the rule of 72, basically, whatever interest you're getting, 0.03, you divide it by 72, and it gives you an idea of how many years you're going to take to double your money. You have any idea how long it's going to take to double your money at 0.03% per year? I think it was like 2,100 years. 2,100 years for you to double your money at 0.03%. And that's not including inflation, taxes, and all that BS. Yeah, that would be fun. Yeah, I don't like Nvidia. Terribly sorry. The numbers are just atrocious. And I don't do capital appreciation stocks. They just don't make sense to me for what I'm doing. Okay, Misty's the same thing. Okay, it's a capital appreciation stock. And I'm looking for cash flow. Okay, so it's not my circus, not my monkeys. Anyway, let's keep on going. Okay, I read a lot. Okay, Misty, okay. Dina, good evening. What's a stock you personally have been eyeing? U.S. Steel and Pepsi. Eric, thank you for that. Just another account. Good evening. Scott Hackler, good evening. When you do the option part of a trade, is it after you bought it? Just another account. It's the exact same time. Now, when I'm entering into a new position, I buy and sell at the exact same time. I buy the stock, sell the option at the exact same time. Okay? But when I already own a stock, usually on Friday, I will roll it forward, or I'll let it expire over the weekend and then sell an option on Monday. Haphazard, there's no 29th of February. I'm well aware there's no 29th of February, but I can guarantee you this. After the 28th of February, there comes another day. Whether you want to call it the 29th or you want to call it 21st, it's up to you. And yes, there is a 29th. Isn't there a 29th? Yeah, on a leap year. Yeah, anyway, no, I'm not holding Solana. Okay, Randall Ray, we're going to check out U.S. Steel. Yep, we're going to check out U.S. Steel next. Hold on a second. I love U.S. Steel. All righty. Yep. Okay, here's what Randall Ray says. Now, Randall, this is the exact same situation I'm in, the exact same one as you. I consider losing my U.S. Steel because I have made huge premiums for several months and I can't roll it. See, I'm in the exact same situation. Okay, I bought it at 41. Okay, let's just pull it up. Okay. Okay, look at this. Basically gone sideways all year long, staying right in that little channel between 32 and 42. Just going sideways all week. All year. And then look what happened last week. Thing freaking jumped up to 53. Well, that's nice. However, I jumped in at 41, right around here. Okay? And then for the past couple of months, I've been getting a nice fat premium, 2-3% every single week on my U.S. Steel. And then it jumps up last week. So I had to roll it forward. and rolling it forward just didn't pay. So I'm tying up all this money and I'm not getting 1%. So bye-bye, I'll let it go. Okay, I made my profit. I made a nice profit off of it. So I'm letting it go, and when, not if, when she comes back down, I'll jump back into it again, because U.S. Steel pays awesome premiums. It really does. So yeah, Randall, I'm in the exact same position you are. Made a lot of premiums over the last few months. But, okay, when the train stops, it's time to get off and jump on another train. So let's find another one and see what we're happening. Okay, haphazard, check Casey. We already did that. It's no. Okay. Haphazard, 45 HER-E. I have no idea what 45 HER-E means. We are the only species that needs to pay to survive. You're absolutely right. Okay, Mr. M-Bets. Thoughts on single option puts and calls on companies you're okay with being assigned with worst case. Okay, I like that idea. Jessica, good evening. Jonathan, good evening. Haphazard. So, 10,000 equals 100 a week. Also, thoughts on Casey. Okay, haphazard. We looked at Casey already. It's a no. Cliff, I found 25-year and 30-year-old dividend stock list in Thinkorswim desktop. Yep, they're there. Look at the long term. Okay, so haphazard. I told you this before. Okay? Okay, haphazard, listen closely. Your idea of long-term and my idea of long-term, two totally different things. Okay? I'm 61. I wake up and I'm happy just to be alive for another day. Okay, the Lord had blessed me with another day on the rock. Okay? Long-term for me is 30 days. Okay? 30 days, long-term for me. Okay? And we already looked at Casey. Casey's no. Scott Young, good evening, James. Take a look at Hewlett Packard. You know what? I looked at Hewlett Packard yesterday. It was so good. I bought some this morning. HPQ. Here's Johnny. Okay, high, low. Where was it? Where is it? Look at the motion. Sideways, down, up, down, up, down. Look what happened today. Holy cow. Yeah, I did buy some this morning, but let's take a closer look. Let's close this up. Okay. Oops, too much. Right there. Here we go. A year ago, we're at 33. The high of the year was 39.89 back in the middle of November. Okay, now we bottomed out in the middle of April at 21.40. So think about that. The high is 40. The bottom is 21. That's almost a 50% drop. Almost. So this is what I tell people. When you buy a stock, rule 1, never buy something you don't understand or you don't want to hold on to. Rule number 2, never sell at a loss. So if you bought it at the high at 40 and now it's down in the 20 area, are you panicking and selling? Or are you saying, oh, well, it's just the way it is? Rule 1, never buy something you don't understand. Rule 2, never sell at a loss. Because even with the stock being in the 20s, you're getting the exact same dividend as you would if you bought it in the 40s. It's the exact same dividend. It's the exact same cash flow. Now, let's take a look at the options. So if you bought it at 41 and now it's at 25, well, look at what the 25.50s are going for. 2 strikes out of the money. It's going for 28 cents a share, which is over 1%. Now, I wouldn't sell it at 25.50. Okay? I'd keep my eye on it. And as it rose, I'd roll it forward. Rolling forward, I learned that just the middle of last year. Had I known it 2 years ago, I wouldn't have had any losses last year. But I didn't know. All right, anyway, let's keep on keeping on. I forget who sang that song. Keep on keeping on. Got to make the best of. All right. Let's take a look. Well, anyway, it's going to be a no. Now, I already own some. And yeah, I didn't even see this today. I bought some, I think, yesterday or the day before. But besides the point. The high, the low, where was it? Where is it? Look at this. Up, down, big gap here. Got a big gap here, too. Say big gap up, yep, it filled. Big gap down, it's going to fill. Going to hit the bottom, it's going to turn around. So I'm going to keep my eye on it. I'm going to take a look at it next week, because in the next couple of days, tomorrow, the next day. So I'm looking for 2 days to the upside. Okay, if this is going to be the new bottom, I want 2 days to the upside for this thing to turn around and go back up again, because that's all stocks do. They go down, they go up. That's it. Well, she just came down. What's it going to do next? It's going to find the bottom, and when it does, it will turn around and go back up. That's the point I want to buy, because I like Hewlett Packard. It is on my list. Now, there's 10,000 different stocks. This one's on my list. There's a whole bunch that's not on my list, but this one is. All right. Next, how do you roll forward if you lost value? Also, can you please explain how institutional investors open positions or move markets? He sold all his shares off the day after earnings yesterday. Motor oil, what is that? Okay, got it. How do people make money from market crashes? Okay, so that's an interesting question. How do people make money from market crashes? Well, think about it. Where are you when the market crashes? Do you have cash reserves available to you if the market crashes? Because that's all markets do. They go up and they go down. They go up to a certain point and then they crash. They go up to a certain point and then they crash. If you take a look at history, you will notice we have had market correction, market crash, market whatever you want to call it, market pullback, every decade for the last 100 years. Every decade for the last 100 years, there's been a crash, a pullback, a correction, whatever you want to call it. Okay? They're necessary. Okay? They go up, they go down. They go up, they go down. The prices get inflated, then they crash and they come back to reality. So you make your money when you buy, not when you sell. Never buy a stock you don't understand. And then when I say that, make sure you check the numbers. That's why I'll never do Nvidia. Check the numbers of Nvidia. $135. It has a book value of less than $5. Book value of less than $5. Think about it. If the Supreme Court says to Nvidia, so you need to divest and pay off your investors, you're getting $5, whatever the book value is. Well, take a look at Ford. Okay, Ford, the book value is currently higher than the stock price. So if Ford liquidates, you're making more money just from the liquidation. Not so with Nvidia. Not so with Tesla. Now take a look at General Motors. General Motors is the exact same thing. Okay, the book value in the revenue per share way surpasses Nvidia. Okay, and the stock is what, $40? And the book value is what, $60? Huge difference. People buy stuff because of the hype. You're buying Nvidia because it's in the news. Everybody hype, 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 hype. Yeah, it's going to go up, but eventually you got to pay the piper. You dance to the music, you got to pay the piper eventually. That's why I'll never buy stocks like Nvidia, because I'm in a different point in my life. I'm looking for cash flow, consistency, predictability, safety. That's what I'm looking for. Now, for those of you guys in your 30s, 40s, and 50s, hey, you can mess up. You can, because you still got time. But when you're retired, you have less chances. Edith, good evening. Brick State, New York. Hey, hey, hey. Cool beans. All right. How do you roll forward? RS, rolling forward is really not that difficult. Now, you're on YouTube. There are 2 channels on YouTube. The one you're on right now is me standing in front of the screen. Okay? Me standing in front of the screen. The second channel on YouTube is just the screen itself. So it's easier to see the small numbers if you have a big screen TV. Now, if you're on your iPhone, your mobile device, you're not going to be able to see these little tiny numbers. That's why the screen is live on YouTube and it's being recorded. So in case you have any questions, you can always go back later on and watch the videos again. Okay? I record every single night, and every single night I live stream, and every single night they're recorded. So they're all about the exact same, okay, because we're doing the exact same thing over and over and over again. Okay, so this trading strategy, for those, just in case you're wondering, it's boring, it's slow, it's monotonous, there's no shiny objects, it's not in the news, but you know what? It's consistent, it's predictable, it's safe, okay, and I can do it in less than 10 minutes. I can do my whole account in less than 10 minutes because it's really not that difficult. Anytime I look at a stock, okay, 3 to 4 seconds. You ready? Uh-oh. Let's try that one again. Here we go. You ready? 1, 2, 3. High, low, was, is, direction. That's less than 2 seconds. Okay? And here it is right here. What's happening now? Is it possible for this might be a good one? Well, let's find out. It's AT&T, by the way. A year ago was the bottom of the year for AT&T, $17. Then she shoots up. Look at this. The high of the year, which is the beginning of April, $29. Okay, so $29, and then she dumps down to 25, shoots back up, pulls back down. Look at the last 30 days. Last 30, right there. Okay, high, low, was, is. Look at this. Up, down, up, down. Yeah, no. Okay, I'll keep my eye on it because look, here's the bottom. Then she went up. Now she's coming down. Now I want 2 days to the upside before I jump in. Now AT&T's been around for 100 years. We all know who AT&T is. I mean, think about it. But the current price, $27.38, I'd be looking at the 27.50s. 27.50s, 32 cents. That's more than 1%. It's simple math. Remember, it was created for a 9-year-old. Simple, safe, predictable, consistent. Okay? So, AT&T is going to be a no. No! How do I roll forward? Okay, so RS, you ready? Let's actually take a look at one. Let's get rid of this. Let's choose an account right there, that account right there. Now, first thing I want to do right there is take a look at Harley Davidson. Here we go. Create rolling order right there. Okay. See that? Let me go back and do it again. Okay. Monitor. Okay. You take your cursor, you put it on top of whatever trade it is you're looking at, right click, window pops up. The fourth one down says create rolling order. Click on that, window opens up, there you go, and there it is right there. There's the order. That's rolling it forward. Okay, now you have a couple of choices you could do here. 30 May, which is tomorrow, 6th June, which is next week. So I'd be buying back this one, and I'd be selling that one. And then whatever my credit's going to be, if it's going to be a credit, well, here it's a credit of 2 cents. Is it really worth 2 cents to roll it forward? Nope. But guess what? I got no choice in the matter. I got to roll it forward. So I could roll it forward 2 weeks and go to the 20th of June. Oh, look at that, 30-cent credit. That's a little bit more money. Or I could go back to the 6th of June, and I can drop the price from $22.50 to $22. Well, now I'm getting 50-cent credit. That's more than 1%. So let's confirm and send. There you go, right there. Buying back the 30th of May, which is tomorrow, selling the 6th of June, which is next Friday. Okay, and then I'm changing the strike price, and I'm looking for a 50-cent premium. Now, 50-cent premium on a $25 stock, well, that's not that bad. It's over 2%. Okay. See, that's how you roll forward. See, I like Thinkorswim. It's a trading platform. Everything is there for you. Just right-click, select roll forward, and it pre-fills out everything for you. Next question. Next. Quantum Antenna, how are you today? Frank, How you doing, Frank? Okay, Mr. Mbets. Thoughts on single option puts? We already talked about that one. Kevin. Thinkorswim won't allow my 15-year-old son to trade covered calls. Any recommendation? Yeah, Kevin, you got to put it into a, what do you call that? A custodial account. Put it into a custodial account, okay? And you just trade with him. You open it up, let him do the trades. Simple. On your trades, what's a diagonal? I ain't going to go into that one, David. Okay. Now, David, I give away all this information for free. I'm here at 2.5 hours every single night. Okay. I got to draw the line somewhere. Okay. So I give you at no charge whatsoever an opportunity to show you how to make 1% every single week. 1% every single week is 50% per year. Okay. I'm not going to show you every single trade there is out there. Just one. HCTI. Sonia, what is HCTI? Never heard of it. And usually HCTI, let's try it. Well, let's try with putting it in the right spot. HCTI. Healthcare triangle. Hell no. Okay, now, Sonia, you're relatively new here. Okay, I'm pretty good with names. I only like companies that have 2 decades of profitability. There's no way possible that company, HCTI, can have 2 decades of consistent profitability, especially at the price it's at. Okay? Cliff, Think or Swim list is not 10,000 dividend stocks, 2030. I will have to call them. Okay, Cliff, that's not what I said. Okay, now, one thing that bothers me more than others is when people mishear and misinterpret what I say. Okay, I said there's over 10,000 stocks, 10,000 companies you can invest in. Okay, so every week I check. Okay, here we go. FinViz right there. Okay, and the screener right there. Okay, now wait for this ad pops up. Close. Oh, check it out. All right, so Cliff, you ready? FinViz, financialvisualizations.com. 10,058. That's how many different companies are available this week. So on Tuesday, there was 10,046. Now there's 10,058. The number changes every day. New companies are added, some companies are taken away. Now, Cliff, financial visualization, finviz.com, will allow you to take a look at all this kind of stuff. Look, the exchange, market cap, earnings date, price, index, dividend yield, average volume, blah, 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 all this information. But right here is the number, 10,058 different companies. I look every single week just to be, accurate. 10,058. So let's go right to here where it says dividend yield. Okay, now I want companies to have a positive dividend. All right, 5,805. See it right there? Okay, 5,805 companies pay a dividend. That's just a dividend. It doesn't say what it is. So let's go a little bit deeper. Okay, positive dividend. Okay, a dividend over 5%. 1,475. That's still a lot of companies to take a look at. That's over 5% yield. All right, well, let's get out of there. I also want to go over to here. Do they have any options? I only want weekly options. That's it. So if I change that, optionable, well, look at that. Now I'm down to 718. Well, 718, well, they could be monthly options. They could be weekly options. Anyway, there are over 10,000 companies. Let's get out of that. Let's get out of that. Let's go right to there. All right. Here we are back again. All right. So hopefully that worked out for you. Uh-oh, Sonia, G-R-O-V. Really? G-R-O-V? G-R-O-V. Nope, wasn't that quick. Eric, A-M-Y. Nope, doesn't even pull up. Scotty, where you took a look at HPQ. Okay, Sonia, I already took a look at HTCI, whatever the heck that thing is. It's a no. Okay. Okay, Sonia, you can ask me however many times you want. HCTI, we already looked at it. It's already a no. Now, for those of you guys putting comments in the comment area, I do read each and every single one. Before the night is over, I will read each and every single one. Please only ask the question once. Haphazard, I'm smart enough to know when I'm outsmarted. I'd be interested in investing with you if I could PM. Personal message. Yeah, go ahead. Send me a text. We'll chat. Send me okay, haphazard. Send me a number. I'll give you a call tomorrow. Just another account. Could one do a covered put if they feel it's going down? Yes, you can. Okay, Laurie, Sonia, Paul, just ask once, he will get to it. Okay, yeah. Okay, you gotta remember, Sonia, I have 7 different accounts running. 7. So I have questions over here, 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 and some down here. So you may think I'm ignoring you. I'm not. I'm just trying to be courteous to everybody asking a question. I pause the questions on my screen and I do them one at a time. So I make sure I answer each and every single question. Caterpillar, woohoo! Journal to be, stocks and options, both. Okay, what do we have over here? Motor oil. Yep, got that one. Okay. Sanil, hi. Also, can you explain how institution investors open positions or move account markets? Well, they just have a lot of money. Think about it. Now, the amount of money I have, okay, is not going to change the market whatsoever. Okay, we're looking at what, 6 digits, 7 digits, 7 digits. Well, you're talking about institutional traders or institutional trading. Yeah, well, they have 8, 9 digits. When they put in 10, 15 million into a position, yeah, that can change the direction. You know, my few thousand shares ain't going to do anything. Okay, we already talked about how to roll it forward, RS. Narinda, good evening. Stocks or dividends? What is that? A journal to be? Yep, stocks and dividends. Oh, 3A Ghost, Caterpillar. Woohoo! All righty. Caterpillar. Interesting. No. Interesting. No. Now, the reason why I'm saying no, take a look at the last 30 days. Okay? Here's the bottom. Here's the top. Okay, she dropped down. Now she's back up again, going sideways at the top. Okay, it's not a place to play. Not the sandbox I want to play in. Amazing. This is cool. And I appreciate that. Thank you. All right. Desire Livestream. United Healthcare. We already looked at that one. It was a no. Do you buy options or do you sell them? I sell options. Is Caterpillar a good dividend stock? Well, Caterpillar is a great dividend stock. But, you know, last month was the time to buy. Not this week. Okay, look at it this week. Okay, you're going for new highs. I don't go for new highs because it's never been there before. That's like kind of going on safari. Dear Livestream, thank you. You must have missed it. Uh-oh, I must have missed what? Hey, dear Livestream, ask me again. Ian, you missed my question. Laser, L-A-Z-R. What the heck is that? It's never a good sign when I say, what the heck is that? Okay. Laser. Never heard of it. Well, let's check and see how many dividends they pay out. Oh, I must have missed it. Okay, so, and let's take a look at Laser. Now, I'm going to go right to Yahoo Finance to find out exactly what kind of dividends this company pays out. Okay, right there. And I got to apologize for not having it preset. I usually have it already set up and ready to go. Give it a second. Here we go. L-A-Z-R, huh? L-A-Z-R. Okay, we're going to quickly take a look. L-A-Z-R. There it is. $3.74. Okay, so, and, terribly sorry, but see this right here? EX dividend date, nothing there. Forward dividend and yield, nothing there. That means there's no dividends. Okay, this is a dividend investing channel where we look at dividend stocks. And if it doesn't have a dividend, why are we looking at it? Okay, you're new here. I'm going to cut you a little bit of slack. Okay, I was inquiring about the stock options. Well, I love stock options. Oh, you are only a dividend guy. No. Okay, I do dividend stocks looking to sell stock options against dividends. It's called a covered call. It's one of the safest and most predictable trading strategies there is. Oh, I don't mean only, I just mean only studying dividend. Didn't realize, my apologies. That's okay. So, Ian, what I'm doing here, you're new here, Ian, so let me briefly explain. In 2008, my 9-year-old daughter jumped on my lap, said, Daddy, what are you doing? Can you teach me? Okay, so 9 years old. She wanted to learn how to trade stocks at 9 years old. So how do you teach a 9-year-old how to invest? Well, number one, it's got to be simple. It's got to be safe. It's got to be predictable, consistent, and no way for her to lose. So I came up with a strategy with 5 rules, simple rules. Rule number one, never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable. Weekly options only. And then make sure the numbers work. Okay? 5 criteria, 5 simple rules. So I buy dividend stocks and I sell covered calls against them to create a weekly cash flow about 1% every single week. It's slow, it's boring, it's monotonous, it's the same stocks over and over and over again. But it works. And if it works, leave it alone. If it ain't broke, don't try to fix it. So for the last 15 years, I've been averaging 1% every single week. And it's helping me retire at 59 rather than, waiting a little bit longer. Jimbo, I see you there. How you doing? All right, let's keep on going. I'm glad you like it, Miss Ann. Come by every day. Compounding, it's over 64% a year. So you could theoretically double your money every 14 to 16 months at 1% every single week. It's a simple, safe, predictable, consistent trading strategy created for a 9-year-old. Okay, most adults have make it more complicated than it needs to be. So you're just new here, you just got here, sit back, relax. I'm here for about another hour or so. Can we talk more? Yeah, send me your phone number, I'll give you a buzz. And I promise you, I will not try to sell you anything. Okay, just education. Raphael, James, you mad envy day going live. Thank you. I use your streams as ASMR. I have no idea what that means. I'm in the weed again. Ooh, we should light one up together someday. Stop on by, dude. Okay, I'm right in central St. Petersburg. DM me with your number when you're in the area. Could be fun. Anyway, let's keep on going. Sonia, could you go over the covered? Wait a minute. Could one do a covered put? Yes. Yes, you can do covered puts. Shane Dexter. Good evening, Shane Dexter. Chris, how you doing? Santos, que pasa, amigo? Tucker, thank you for the info. You're welcome. RTD. How do you pronounce that? Oh, can we review Hormel? Flash, gotta love Hormel. Hormel's been around for over 100 years. They are consistently profitable. Dividend king, over 5 decades. of profits, HRL. However, Hormel doesn't have the greatest premiums. Let's check it out. $30.38 to $30.50 is going for 30 cents, barely making your 1%. Okay, $30.75. Ooh, that's not good because you're 30. Because see, at $30.75, you got to go with the 31, and the 31 is only paying 15. That's 0.5%. That, don't get me wrong, I love Hormel. I very, very rarely ever buy it because the premiums aren't that great. There are other stocks that are better suited for what I want to do. Okay, Tucker, you said Coke. Is that C-O-K-E or is that Coca-Cola? Because there is a big difference between the two. Will, how often are dividends paid? I thought you said before weekly. Okay, so Will, a dividend is a portion of the profits the company gives back to the investors. That's you and me. We're the investors. We buy, we sell. We are the investors. Hold up. I got to find something better for my voice box. This is, I'm not used to talking so much. Anyway, how often are dividends paid? All right, Will, out of all the companies that pay dividends, some pay once a year, some pay twice a year, some pay 4 times a year, and some pay every month, 12 times a year. Every company is different. Every company has a different date in which they pay their dividend. Okay? Now, when I said weekly, I meant weekly options on a dividend stock. So a dividend stock, weekly options. That's where I get the weekly cash flow from a dividend stocks. And Will, some companies pay quarterly, some pay annually, some pay biannually, and some pay monthly. Almost everyone's different. So Tucker, you let me know, is it Coca-Cola or is it Coke? Top comment, Will, sold quarterly, some annual. Yep. Some, I will. Top comment, why is he saying weekly? I'm confused on that one. I say dividend investing for weekly cash flow. I did not say there were weekly dividends. I said dividend investing for weekly cash flow. Sometimes a lot of people get that confused. They think the weeklies, the options, they think the dividends are paid weekly. No, they're not. They're paid either monthly, quarterly, annually, or biannually. But the options are weekly. Flash, we already looked at Hormel. It was a no. Able to look at Enbridge, E-N-B. E-N-B, Enbridge. Let's try that again. E-N-B, Enbridge. Okay, Enbridge. Here you go. No. Now, the reason I'm saying no to Enbridge, it is a monthly. 20 June, 18 July, 17 October, blah, blah, blah. Monthly means I can only trade it once a month. Once a month means 12 times a year. What am I getting? 12 to 24%? Yeah, no, thank you. Now, I like once a week. Once a week is 50 to 100% a year. It's all a numbers game. If you want to do once a month, hey, more power to you. You have fun. I don't do them because I just don't like the way they play out, and they're not as profitable. So for me, monthlies are a no. Remember I said rule number 4, weekly options only. And, very clever. Thank you, Raphael. All right, we did that one. What about Southwest Airlines? Ooh, I like Southwest Airlines. And correct, weekly covered calls. Absolutely. Okay, Southwest Airlines, LUV. How do you get Southwest Airlines out of LUV? All right, here we go. Nope. Do you see how quick that was? High, low, where was it? Where is it? Look at the motion. Up, down, up, down, up, down, up. Well, let's zoom into that, and I'll tell you why it's a no so quickly. Do you see that right there? 30 days ago, here's your bottom. Today is the top of this time frame. Now, I would have liked to have gotten here. Okay, went up, it pulled back, then it went up again. Or here, here's the bottom, she went up. So no, I do like it, don't get me wrong. Now, I will take a look at Southwest Airlines in about 2 weeks. Now, the reason why I'm saying 2 weeks, let me turn the page, 2 weeks, LUV. Now, the reason why I'm saying 2 weeks is look where it is. Now, if you bought it 24, and now it is at 34. That is a $10 increase in the last, about 30 days? A $10 increase on a $24 stock is, what is that, 47, 40, 46%? That's a big jump. Yeah, this is going to be profit taking, and then this is going to drop. Well, in about another 2 weeks, it should be, hypothetically, somewhere down here, which would be more advantageous. Don't 3HS. And do you trade ETFs with this strategy? I haven't met an ETF that I actually like. Okay. Wait a minute. Yes, I do. I have one or two. MPW, I did trade that one. I actually have some MPW. Zestify, yesterday I DM'd you. Which indicate do you use? Oh, okay. Zestify. What indicators do I use? Are you ready for this? You're going to love it. It's simple. It's easy. I have 2 criteria and only 2. You ready? Number 1, consistency of profitability. That means you need to find out, are they a dividend king, dividend aristocrat, dividend champion, dividend contender, or are they on Warren Buffett's list? Well, that tells me right there it is consistently profitable for more than 2 decades, if it's on one of those lists. Okay, number 2, weekly options only. So that's it, just 2 criteria. Weekly options and consistency of profitability. And then you take those stocks, you throw them into a calendar, hold that thought. Here's Johnny. Hold on. Here he is, right here. This is an EX dividend calendar. It looks like a regular calendar, okay? It says May 2025, okay? We are here the 29th, okay? It's a regular calendar, except this one has little green dots on it. Now, those little green dots represents companies that pay a dividend, and they're successful for more than 25 consecutive years. So each one of these companies with a green dot has 25 years of increased profitability. So yeah, I will buy it, okay? Any one of them, as long as they have weekly options, okay? Not all of these have weekly options. But I take a list of stocks, dividend kings, dividend aristocrats, dividend champions, dividend contenders, and then for the fun of it, I'm going to throw in Warren Buffett's list. That's 5 lists. I will take those 5 lists and I'll put them into the calendar. The calendar will tell me exactly when they're paying their dividend. Okay? Why is that important for me? Well, because just before they pay their dividend, the stock has a tendency to increase in value. And if you know when a stock is going to increase in value, well, doesn't that put the odds and probabilities in your favor? Now the only choice you got to come up with is, what trading strategy do you use? So just by knowing a stock's going to move, that's only part of the equation. That's like giving you a treasure map with an X on it and handing you a shovel. That's only part of the equation. You got to figure out the rest. Let's keep on going. And what is that on your screener in the background? Your program or something else? Okay, and this behind me is a trading platform with Charles Schwab. That's where I do my trades. I buy and sell on Think or Swim. It's free to use, and I don't get anything. I don't get a kickback or affiliate link. I don't get any money from that. I just like it. Okay, I wrote a book 15 years ago, Choosing the Right Trading Platform. Well, when I found this one, it had everything I wanted. It's the only company that I know of that had a trigger trade. I love a trigger trade. It's great. That's what we used exclusively. It was a set it and forget it type scenario. All right, next, what else do we have? Eric, thoughts on AbbVie? I love AbbVie. AbbVie. All right, let's go back to trade and back to here and AbbVie, ABBV, and ooh, interesting. Okay, it wasn't a yes, it wasn't a no, it was a ooh, interesting. High, low is, look at the motion, up, down, up, down, up, down, up. 85.90, the 87s are 235. Well, that looks good. Well, let's check it out. Let's dive in a little bit deeper. A year ago was the bottom at 153. The top, 219, that was in the beginning of March. See how that works? Nope, that don't work any better. All right. Okay. High, low, is. Look at the motion. Down, up, down, up. Oh, ooh, I like that. That looks good. Now, the reason I'm looking at the last 90 days is to get a good idea of what the last 3 months look like. My fellow traders, what are they doing? Well, here's the top, here's the bottom. It went back up, it went back down. Now we're going sideways, but look at right there. Bottom was last Thursday. Friday was higher. Tuesday was higher. Wednesday, okay, but today was higher also. It is definitely going to the upside. So let's zoom in and take a closer look the last 30 days. Okay, here's the last 30 days. High, low, is. Look at this, up, down, up. Simple, right? Don't make it more complicated than it needs to be. Hold that thought. Oh, Antonio, gold, Zestify. Can I analyze? Yeah, no. I don't do cryptocurrency. I don't do Forex, and I don't do commodities. So, Antonio, terribly sorry. Gold is nothing but a dust collector, in my humble opinion. Don't get me wrong. It's great if you have a whole bunch of money you have no need for. So you put it into gold, you let it sit on your desk, and you let it collect dust. 20, 30 years from now, it's going to be worth more money. But you can't get weekly cash flow from a bunch of gold. It just doesn't work that way. Okay, so I'm looking for cash flow. You know what? Great, awesome for you. If that's what you're doing, if that works for you, great, awesome. If that's the case, you're in the wrong place. You're just wasting your time. I appreciate your efforts and I appreciate your interaction. You know, great. But you're wasting your time here. I don't do commodities. I don't do futures. I don't do cryptocurrency. I don't do Forex. I don't do smart contracts. I do and only do dividend investing for weekly cash flow using stock options. Now, there is an opportunity or there is a chance that you will get a text message, an email, a DM, a WhatsApp, one of those things from someone pretending to be me. Now, I'm live. You can see my lips moving. You can hear my voice when I say I don't do any of that stuff. If you want to talk to me, seriously, send me your number. I will give you a call. All right? So if you think you're chatting with me via text, what we call that, WhatsApp, Telegram, or any of that stuff, it ain't me. Okay? I actually like using the phone in which it was originally intended. Hello, how you doing today? Awesome. I don't do that other stuff unless I already previously talked to you personally. Okay? Okay, I had someone cut and paste and show me a conversation he was having with me about cryptocurrency. Hey, that's cool. It wasn't me. Okay? And I did talk to someone who got talked into buying some cryptocurrency. You know, I'm terribly sorry. It happens. And unfortunately, there's nothing anyone can do about someone else using my picture, using my name, using my videos, and pretending to be me. I'm just letting you know, here, you're hearing my voice and you're hearing me say, if you really want to talk to me, send me a number. I will personally call you. I won't give your number to someone else for them to call you. I personally will call you. And you hear my voice. You know what I sound like. I have a unique style of talking on the phone. Hey, everyone, this is James from Dividend Stock Talk. That's the way I just talk. That's just me normally. Okay? And I do call people. Okay? So anyway, if you want to chat, send me a number. I'll give you a buzz. All right? What else we got here? Look, it's 11 o'clock. We got 30 minutes left. Antonio, no problem. Cool beans. So that'll do. Tell me. Okay, cool. Tell me what to do. Okay, Antonio, I don't know anything about you. Okay, now a lot of people ask me, what should I do? Well, I say keep coming back, keep learning. It's not costing you anything other than your time. I mean, what else are you going to do? Watch reruns of some show on TV, some reality show? Hey, you can do whatever you want. But if you want to learn, great. I'm sharing it for free. It's not costing you anything to be here. It's a simple strategy created for a 9-year-old. All right? So it's not that difficult. Adults have a tendency to make it more complicated than it needs to be. Addie to Smooth. Good evening, and how are you today? Oh, 2 for the information. You're welcome. You appreciate that. Wonderful. Addie, what is happening here? We're doing dividend investing for weekly cash flow. Nice of you to join. All right. Antonio, I appreciate that. Thank you. Pan America Silver, please. Ooh. PAAS. PAAS. Interesting. Interesting. Let's take a gander at it. You ready? Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Up, down, up. That's simple, right? Doesn't need to be complicated. A year ago, we're here. It jumped up. Now it pulled back. Okay. Currently at 24.83, the 25s are going for 25. So we can get 1% out of this thing if everything else looks good. So the chart looks okay, the 1 year. The numbers look adequate, not perfect, nothing jumping out at me. But if you like PAAS, let's take a look. A year ago, we're at 22.23. The bottom of the year was in the beginning of August, 17.83. The top of the year was at 28.63, middle of April. Well, from the middle of April, look at this. High low look at the direction. Down, up, and down, up. Well, that looks pretty damn cool, don't it? But, hold on. Let's go to the last 30 days. Zoom in a little closer. Okay, here's the last 30 days. Down, up, down, up. Okay, so 22 to 24.50. That's $2.50. $2.50. Well, $2.50 on a $22 stock is over 10%. So this thing was bottom here and it jumped up 10%. Can it go more? Yeah, it can. Is it going to? I guess we'll see. Okay, but do you like it? So far it looks okay. What does it normally do? Now, for that, I like the seasonality chart. That gives me an idea of what it's been doing over the last 10 years. Well, this time, over the last 10 years, that don't look that glamorous. Okay? She's going to jump up. She's going to pull back, go kind of sideways. It makes me a little iffy. Now, let's go and check out the numbers. Okay, so the 25s right there. Let's see what it looks like. Covered call at 25. There it is. Let's do one contract. All righty, at the market. There it is. And here's Johnny. Buy one covered call, PAAS, 100, it's the weeklies, 6 June 25, that's next Friday. Not this Friday, next Friday. The $25 call option against the stock at the market. $107 is the profit, and it's going to cost me right around $2,400. Well, let's break out the calculator and see what that comes to. That number looks pretty decent. Well, let's take a look. Calculator 107 is the 107.50. Okay. Maximum profit. Remember when I said simple, safe, predictable? Well, I know exactly what I'm going to make before I even do this trade. Now, if you're just buying a stock, you have no clue what you're going to do. Kakarum, how are you today? Good evening, good evening. Cost of trade, including commissions and fees. 23.93. Okay, so let's figure it out. 107 is the profit. 23.93 is my investment, and that's 4.4%. Well, that's pretty damn awesome. I got to write that one down. PAAS 4.4. Ooh, dog it. Now, that's not a tip. Okay, I don't give tips. I don't give advice. I don't give recommendations. I just look at the stocks you guys ask me to take a look at. I read the numbers as they pop up. I have no control over this. Okay, this is information from Charles Schwab. Okay, next. Let's get out of that. Let's get out of that. Let's go back to this right there and back to this right here. Okay. Jake, thoughts on future trading? Now, I did futures years ago. It's not as consistent as the stocks are. Okay. Add smooth. So how do you go about investing in stocks? Like, what exactly are you looking for when investing? Uh-oh, you're new. What I'm looking for when I'm investing, I'm looking for a simple, safe, predictable, consistent 1% per week trading strategy, specifically on companies that are consistently profitable and have at least 2 decades of consistent increased dividends to their shareholders. Then I take those companies, I buy them, sell them to someone else using a covered call. It's one of the safest trading strategies it is, and I'm looking for a 1% per week. Now, 1% a week is over 50% per year. Now, it does take 5 or 10 minutes every single day. Terribly sorry if that interrupts your life to make a 50% profit by the end of the year. Most people spend more time planning a barbecue than they do on their personal finances. Okay, that's what we're doing here. You don't say. No, Brian, I don't say. But welcome to the show, Brian. You have to show me how to do this on Robinhood. Well, I don't have Robinhood handy at the moment. I don't like the online version of Robinhood. I like the phone. Okay? It's clickety, clickety, clickety. Simple, easy. But now with Robinhood, you got to buy the stock first. Then you go around and you sell the option against it. Now, we are going to be setting another channel up specifically for the Robinhood trading, for those who do fractional shares, who don't have a lot of money. Do you tard? I have no idea what that means. Is Rivian a good stock? Jake, you're asking the wrong person. Rivian is not on my list, and there's a reason why it's not on my list. What starting capital would you recommend? Wazzy, Wasby, how are you doing today? That's cool. I need that channel name. I haven't started that channel yet. Okay, so you may have met my grandson, yes or no? But his account is with Robinhood. Simple, safe, predictable, because they allow, I can trade 50 cents if I wanted to on Robinhood. Isn't that weird? Fractional shares. So my grandson, he's 5. He doesn't have a lot. So me, the ex-wife, my son, my daughter-in-law, and my in-laws. So the 6 of us, 2 parents and 4 grandparents. So we take our spare change, 15 cents here, 20 cents there, $1.85 here. We throw it into a jar. Between the 6 of us, well, that's a couple of dollars a week. Well, he's 5 years old. At 1% a week for the next 13 years, by the time he graduates high school, if he's not a dick, okay, some kids who graduate high schools aren't really that pleasant. So if my grandson is responsible enough at 18, it will be turned over to him. If not, it will be put into a trust until he is responsible. Okay, but it's a simple trading strategy. Now, with Robinhood, you can do fractional shares. And I can deposit $1.87 and buy $1.87 worth of Microsoft. Granted, it's not a lot, but that's not the point. The point is he's 5, and over the next 13 years until he turns 18, well, between the 6 of us keep depositing money, hopefully he'll be relatively well off when he graduates high school. Hopefully. All right. Next. That's cool. I need that channel. Okay. As soon as we get it started, we'll let you know. Tucker, I'm with you on the long-term view. Thank you, Tucker. Davin, how are you doing today? Granny, 0804, how are you today? Flash, we already looked at Hormel. It was a no. Which stock is this again? This was PAAS. Mark, the 32nd, how are you today? Hey, James, I like how you exert patience towards stocks. Sets a good example for your kin. Thank you, Mr. Mark. Anyway, let's keep on progressing. African King, how are you today? Cliff, the contract is for 1 week. It expires. Not all stocks have weekly contracts. Absolutely correct. Mike, can you walk through the rollover when you purchase a stock is below the strike and the stock moves up? Okay, Mike, we already did that. Kuna Hardway. Okay, any course for beginners from scratch? I have one, but it's old. We're thinking of this weekend putting together another simple trading course. It's cool. Okay, got that one. Antonio, that's funny. Yep. Okay. Scott Young, how are you today? Donald, how are you doing? Samadhi DeFinch, good evening. Eric Land, good evening. Okay, great question. Any course for beginners from scratch? Okay, yeah, we are working on that one. We'll hopefully have it this weekend. Ooh, shrimp, Intel. I love Intel. I do. INTC, Intel. Oops, let's try that one more time. INTC, Intel. Ooh, I don't know. Okay. High, low, is. Look at the motion. Up, down, sideways. We're at 2025. Okay, so 2025, we got a choice. Are we going to do the 20s or are we going to do the 2050s? Well, let's take a gander. We're going to do the 20s. The 20s are going for 65 cents. Hell yeah. I love Intel. I do. Great numbers. But take a look at this. Okay, you ready? Look at the high, 37. Look at the low, 18. That is a 50% drop from the top to the bottom, 50%. If you are not okay with a stock dropping 50%, you might as well just leave now, because that's what is possible. And it doesn't matter what stock it is. Ford could drop 50%. Intel could drop. Actually, Intel did drop 50%. They can. When I say never buy something you don't understand, you should know what is the 52-week high, what is the 52-week low. What's the difference between the two? Well, this one's 50%. Can you imagine it? Buying something for $100 and a couple months later it's worth 50? That's a 50% drop. Well, the idea is never buy something you don't want to hold on to for the long term, even if it drops 50%. Because if you buy it here, or if you buy it here, you're getting the exact same dividend. And at the money option prices are going for 2%. Okay? 2 strikes out, 1%. So no matter where you are you still able to bring in cash flow? Now, I look at it every day. Okay? It's just part of my morning ritual. I get up, go to the bathroom, I come sit at my computer, grab something to eat, and then I check my stocks. What did I buy it for? What did I sell? Where's it at now? Those questions take a couple of seconds. Think about it. Let me show you really quickly. Really quickly, let's do this. Let's go here, and let's go here. Okay, first and foremost, all right, right click, view trade, okay? I bought it at 31, I sold at 31s, and now it's at 31. That's it. That's it. It's not that complicated. What did I buy it for? What option did I sell? Where is it at now? What does that mean? Because it means that if I do nothing, I'm going to get all my money back on Monday, and I still get to keep that premium. Or I could roll it forward tomorrow and get another premium for next week. Let's get back here. Let's go there. All right. That being said. All right, so Intel, look at this right here. Down. Not a time to jump into Intel. So I love Intel, don't get me wrong. Okay, now I do keep my eye on Intel. Okay, Rob Base, GE. GE? Is that General Electric or is that GE Aerospace is rolling? GE, no. Imagine that. Look at that. That's the high of the year. I don't ever buy at the high. When is the last time somebody said to you, hey, look at GE. It's at the high of the year. Let's buy it and wait for it to go higher. Someplace it's never been. It's never been at 250 this year. What makes you think just because you buy it, it's going to go up? No, 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 no. Look, here's the bottom here, 180. And it jumped up to 240. Look at all this space. Now, if you bought it at 180, think about this. If you bought it at 180, now it's at 240. That's a $60 increase. You're not going to take profits? What the hell's the matter with you? It ain't a profit until you take it. And if you don't take it, it can be taken away from you. It's not a profit until you take it. Next. Daniel Lott. Hi, it's me again. Good evening. Jake T, AGNC. Hold on a second. 3A Ghost. L3 Harris. LHX. Dude, I'm not even going to bother with that one. Okay, I've been doing this long enough to know that that's not going to be anything. Now, AGNC, that might. Kai Kroc, you said that you grew up poor, so how poor were you back then? Okay, all right. I grew up in the 60s and 70s. I was so poor, okay? I had a bike when I was 10 years old. I got my first bike when I was 10. Okay, my first bike didn't have a chain on it. So I would run the bike and then I would jump up on the seat and I'd coast for as far as I could. Couldn't pedal, there's no brakes. Couldn't go. I'd push it up to the top of the hill and I'd ride it down. No brakes, I'd use my shoes. I put my foot down. And my mother said, stop doing that to your shoes, you put holes in it. So I got hand-me-downs. Not hand-me-downs from my brother. Okay, my older brother. Okay, now my older brother got hand-me-downs from my older sister. So it went to my older sister got all the new clothes. It went from her to my older brother. Then from my older brother, it went to my second older sister. And then it went to me. My younger sister, my younger brother, they got all new clothes. Because after it got to me, they were basically destroyed. So anyway, yeah. And I didn't know how poor I was until my lovely classmates in junior high school. You were poor. You can't get on vacation. Yep. It wasn't easy. We had, what was that government food? Do you remember that big blocks of cheese and the government cheese? Oh, that stuff was good. Powdered eggs. We used to get, we were dirt-ass poor. Anyway, my mother rented the same house for 35 years. Rented a house for 35 years. Rented. Anyway, let's keep on going. AGNC. Okay. AGNC. Ooh, interesting. I'm going to say no to AGNC. Who asked for that one? Jake. Now, Jake, I love the chart. Look at it. It looks great. But what is it about AGNC that I don't like? See the numbers here? Okay, $8.99. So the $9 strike. It's paying 9 cents is 1%. Look at the next one up. 0, 0, 0, 0. So you have to be 100% correct on AGNC. And there is no leeway because 0, 0, 0, 0. Yeah, no. There's a couple of them like that. Energy transfer, ET, same thing. Okay, the premiums are horrible. So I don't do it. Now, AGNC, don't get me wrong, I'm not insulting the company whatsoever. The chart looks great. Look at it. That looks great. But the numbers, it's just not, for me, for this particular strategy, it just doesn't work. All right, so it's 11:25. I end at 11:30. So what I'm going to do now, from now until the end, I'm just going to answer all the questions, because I got a bunch of questions in the chat that I haven't gotten to yet. So let's do this. All right, 3A Ghost, B2 Gold, BTG. What the hell is BTG? BTG. It's a no is what it is. Come on, dude, you've been here long enough. Seriously, you've been here long enough to know I don't do monthlies. The numbers just don't work. Antonio, it was nice. I appreciate it a lot. You're welcome, Antonio. Have a great night. Okay, so 3A Ghost, do me a favor. Now you've been here, you've been pretty good with your interaction, your questions and whatnot. Don't ask me to look at something that you have no clue. Okay? If you had a clue about BTG, you would know it's a monthly, and you already know I don't do monthlies. So it's just a waste of time. Now, I let other people get away with it, but you've been here for a while. You've heard me say it over and over again. I don't do monthlies. So why are you giving me a monthly to take a look at? GE, we took a look at that one. Bruce, how are you doing today, Bruce? Okay, who do we have here? I got a bunch of questions. Okay. Oh, we love you in Birmingham, Alabama. Hey, Tucker, I was in Alabama once. Yeah, I was in the service, LA. Lower Alabama. Eric. Ooh, Eric. Procter & Gamble is a good one. Jake T, what is your take on monthly dividends? Well, I like monthly dividends. AMG and Eric, we looked at BIP, never heard of BIP. What mining companies do you think fit the strategy? Okay, so 3A Ghost, you're under the impression that I categorize my stocks. I don't. Let me take a quick look. Okay, 3A Ghost, you ready for this? Do you see this here? This is a calendar. All right, hold on a second. Get some noise over here in the background. How you guys doing over here? Andrew, how are you doing? I had to mute you there for a second. So you got a question, just unmute yourself and just speak up. Okay? All right. So this is a calendar. I take stocks that are consistently profitable. Dividend Kings, Dividend Aristocrats, Dividend Champions, so on and so forth. I take them and stick them into a calendar. Now, the calendar tells me when to buy them. ED, Consolidated Edison, K-View, Target, these three stocks. The only thing they have in common is they're paying the dividend on the same date. That's it. I don't care if they're an energy stock. I don't care if they're transportation. I don't care if they're mining. I don't care if they're they provide cheese for Chuck E. Cheese. I don't care. If they're consistently profitable and they're on the same date, I'll take a look at them. I don't isolate them by industries or what they do. The only indicator that I'm using is consistency of profitability. So every one of these companies here are consistently profitable. I really don't care what they do, as long as they do it profitably. Okay, and for 25 years. See, this list, 25 years of increased profits. I don't care what they do. All I care is they're consistently profitable. That's it. And they have weekly options. That's it. Eric, no dividends. K-View? Cool. Granny. Thank you, Granny. The Can Man. Good evening. WCP.TO. That's going to be a no, dude. Eric, how do I get best covered call strategy for AMGN? You don't. AMGN's not a great dividend stock for doing covered calls. Kevin, patience is hard to practice with my measly $2,000. Kevin, I'm terribly sorry, dude. Really. Okay? Now, at one point in my life, okay, you have no idea what poor is. Okay? So I would go to school, right? I get off the school bus. I wouldn't even go home. I get off the school bus and old man Simmons is sitting there waiting in his truck. And we go right from the school bus, right to the back of the truck, into the woods, and we stay there until it got dark for $5. That was it. Okay, we were loading firewood for hours. Okay, now we got off the school bus around 3 o'clock. And then the sun didn't go down till around 8 o'clock. So 5 hours we worked cutting wood for $5. Okay, so you got $2,000. I don't feel very much sympathy for you, brother. I don't. Okay, you got $2,000. That's your starting point. Great. Next week you should have more than $2,000. The week after that you should have more. Now I have no idea how old you are and how long it's going to be until you retire, but your starting point $2,000. So for the rest of your life, from this day forward, you can look at people straight in the eye and say, hey, I don't want to hear your crap. I started out with $2,000. Look where I am today. That's the story you're going to tell someone. Now, what are you going to do? Let's keep on keeping on. Nisha, we already looked at AT&T. All right. What do we have here? Jake, what's your take on I already did that one. Okay, I already did that one. Does the calendar represent the seasonality check? No, the calendar represents the calendar. That's all. It just tells me when to look. Antonio, I understand what you are saying. Boom! Gotta love it. Thank you. Or dividend payout. Yeah, 3A Ghost. This does tell you everything you need to know about the dividends. There's 4 things you need to know. Number 1, the announcement date. Hey everyone, this is James from Dividend Stock Talk. We had a great year. This is how much money we made, and this is what we're going to do. We're going to give you this amount at this date. And this one. Hey, Mikey, where are you nowadays?
Down in
Panama?
Panama, yeah.
You know, one of these days, you got to give me a buzz. And I'm going to I want to take the jump seat and hang down there with you.
That would be fun. Yeah.
All right, sit. Hey, Mike, can you mute yourself so I can finish this up? Because we're just doing the questions. Thanks. All right, so what was I saying? Dividend stocks on the calendar. Now, there's 4 things to remember. Number 1 is the announcement date. Hey, everybody, this is how much money we made. This is what we're going to give you, and this is when we're going to give it to you. That's the announcement. Okay? The announcement date. That's the first date. The second date is called the EX dividend date. That's the last day the stock trades before the dividend is paid out. And that, my friends, is represented by a little green dot. So if you wanted to collect the dividend from any one of these companies, you have to buy it before the date. So if we're looking at Johnson & Johnson here on the 27th, if we're looking at Johnson & Johnson and you want to collect that dividend, you got to buy it on the 26th, the 12th, the 7th, the 30th, the 28th, the 1st, whatever. Any date before that date. Date number 3, the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4 is the payment date. 4 dates, that's it. Announcement date, EX date, date of record, and payment date. Okay? All right, next. Here we go. Nisha, good evening. Nisha. Thank you, Nisha. Thank you very much. The Can Man, White Cap Resources. Okay, Can Man, you got to give me the ticker symbol. I've never heard of that company. And usually, don't take this wrong, but usually, I've been doing this long enough, if I've never heard of it, it's usually going to be a no for this particular strategy. Because this particular strategy is specific for companies that are consistently profitable, okay, and have weekly options. Mark Antonio. Mark Antony? Okay, good evening. Bandar, good evening. Okay, PW Live Musician. Which stocks are your favorite top 5 dividend stocks? Ooh, cool beans. All right, Patrick. Ford, General Motors, Macy's, Nordstrom's, Kohl's, U.S. Steel. That's 6. I love those. Paul, good morning. Tumain, good evening. Tucker, good evening. Da Vinci, how are you? VP David Graham, how do you get access to the calendar? Okay, VP David Graham, the calendar is right up here under the Market Watch on Thinkorswim. Ooh, what is a trigger trade? Ooh, a trigger trade is the second, third, and fourth trades are triggered by the first trade. So you can do trade, 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 set them all up in a row, and they'll fall like dominoes as the first one triggers the second one, which then triggers the third one. It was great for dividend capturing. You either buy a stock here and it hits this strike price, you're out. So I could buy and sell. See, I on the 20 years ago when we first started trading the dividend capturing strategy, okay, I was working, so I couldn't sit in front of the computer. So all my trades were done the night before or the morning before the market opened. So I would always buy at the market open, and once it jumped up whatever price the dividend was, okay, I would buy at the market open. Whatever the dividend was triggered by the first trade. So if it opened up at 101 and the dividend was 50 cents, you take 101 plus the 50 cents, my exit price is 101.50. Okay, smooth. Now, we didn't know what the opening price was, and it was the only platform that allowed you to trade whatever the opening price was. It's called an MOC order. MOO order. Sorry, MOO. Market on open. So whatever it opens up, that's what it filled at. Okay, and then you take whatever the dividend is and you add it to that, and then it is market on open, add the dividend, and then you're out. That was the very first trades we started 15, 20 years ago. 10,000 equals 100 a week. Yep. Okay, FX Array. Sir, I am 14-year-old trader doing from 9 years. Sir, and wants to live trade, please tell me. Okay, yeah, actually, yeah. You actually have to get your parents' permission. See, I'm not allowed to talk to someone under the age of 18, so can't help you out. Terribly sorry. Love to help you out, but I don't want to be that guy. Yeah, no, sorry. They say you can. Yeah, I can, only with your parents' permission. So I know it must be strange and very uncomfortable for a 14-year-old. I remember being 14. I didn't like people telling me what to do. But as an adult, I cannot, in good conscience, give you any advice whatsoever. Terribly sorry. So, all right, let's keep on going. H2A, how are you tonight? Sysphilics, you still didn't tell me the stock you've been eyeing. Yes, I did, US Steel. Cliff, I found 20, 30-year-old dividend list of stocks and think it's swimming. Okay, love that cheese. Yeah, so did I. I like the cheese, and I also like the powdered eggs. Oh, those were good. Eric, how you doing? I'll be joining Patreon. Cool beans. Tyler, let's say stock goes down. What happens if the call is exercised? Rule says never sell at a loss. You're absolutely right, Tyler. See, Tyler, we look every single day. We keep a good eye on it. So if we buy a stock, we know at what price we bought it at. If we sell a covered call, we know what that is. So we got to take a look at what did we buy it for? Where's it at now? What option did we sell against it? Where's that at now? 86, dude, I'm just getting ready to leave, brother. How you doing? So if you take all that into consideration, okay, we got some noise in the background over here. I don't know who that is. Noise in the background, Zoom user. There we go. All right. Cool, gotta love it. So on the date of expiration, okay, which is tomorrow at 2:30, we all get together and we take a look at our positions. Is there anything at risk of losing or being called away? So we don't know what those are until 2:30 in the afternoon. So we jump on, we take a look at everything and say, what did I buy it for? What did I sell it? What's it at now? What are the trades that I can do in order to not lose, bring in some money, push it forward another week or another 2 weeks, and keep having that cash flow coming in? Those are questions we ask every Friday just before the market closes, because that's when options expire. They actually expire on Saturday. Anyway. Hey, bro, I've blown like 7 Apex evals. I need a little help. Jeff, awesome. Come back tomorrow. I'm just wrapping up. With Thinkorswim, is there an app for the phone? Yeah, but you don't want to use the app for the phone. You can have fun with it. It's for me, it's too congested and too much going on. There's too much for me. Okay. See, now I like Robinhood. It's simple, it's easy, it's a couple of buttons, great. Yeah, Thinkorswim, too much going on in the phone app for me. Jeff, excuse me, sir. Can you please help me? I've blown 7 Apex prop firm challenges. What tips can you give me for risk management and to overtrade, over leveraging? Simple, Jeff. You ready? Never buy something you don't understand. Never invest in a company that's not consistently profitable. Make sure there are weekly options available. And I think that's about it, those three. Never buy something you don't understand. If you don't understand it and you can't comprehend what's going on in that company and you don't know all the ifs, ands, theirs, and buts, don't buy it. Anyway, there you go. All right. I answered all the questions. All done. Cool beans. Okay, so you guys over on the Zoom class, do you guys have any questions before we call it off tonight? Remember, tomorrow, 2:30. No
questions. Thank you, sir.
Andrew, how are you? No questions. Cool beans. All righty. Okay, Stephen, no questions. Michael, no questions. All right. So I'll catch you guys tomorrow at 2:30. Have a great day, and we'll see. Oh, do you have a question, Andrew?
No, that was me. There's Michael T. I was just saying, have a good one.
Mikey T, how you doing, brother?
I'm doing good, man. I've been following along, man. I was putting in the thing, man. I'm up 35% following, so I'm just telling people.
You're up 35%? 35%, that's cool, brother.
This December, so yes indeed, sir. Been following you since October, so thank you.
Cool. I'm kind of curious what my Christmas present's going to look like this year.
I'm glad you said that, because I actually told my wife that I think I want to send you something because my trading has improved so much.
Hey, I appreciate that. I do. Thank you. Anyway, you guys have a great day. I'm going to see you guys tomorrow afternoon at 2:30, all right? Catch you guys later. And the meeting, now you guys over here on YouTube, alrighty, have a nice day. You guys here on Instagram, you guys have a nice day. See you later. And you guys over here, MG Jimenez. Okay, cool. Alrighty. So you guys have a great day. TikTok #1. You guys have a great night. See you later. And you guys here over on YouTube, I'm trading NQ futures. Cool beans, Jeff. 3A goes, I just need to figure out how to trade options on Robinhood. It's really not that difficult. Number one, you actually have to be approved to trade on Robinhood. So you have to fill out the paperwork in order to be approved for Robinhood. Okay. Frank, show your portfolio to see if you're trusty. Okay, Frank, I have 7 different accounts. Number one, you're new here. I don't share my account when somebody's new here. You want to show up a couple more times? Fine, I'll show you. And besides, all my trades are available online. You can see all the trades in 3 of my accounts. I got 7, but I can show you 3. Okay, I'm not going to show you all 7. 3's, I got to cut the limit somewhere. Copy that, see ya. Okay, so other than that, you guys have a great night, and I'll see you all next week because I don't do Friday nights and I don't do Saturday nights. So Sunday night, catch you guys later.